Welcome to Loup TV. I'm your host, Gene Munster, along with Loup partner and guest, Doug Clinton. Welcome, Doug. Our topic today is, are we or are we not in a bubble? We have to go there, not because everyone is going there, but it is a really important topic, probably a topic that is just goes far beyond the headline here. We're going to start with the headline in a minute. And want to mention too, Doug, you published something recently around this. I think you've been early in your thinking around essentially what's been transpiring more recently. As of this recording, shares of GameStop are down 35%. That doesn't mean anything beyond it has been a wild ride. And we're going to start there and take it into a much bigger conversation about the bubble. Doug, over to you. When you see what is happening with GameStop, what do you take away from all of it?
I think it's obviously one of the key signs of a bubble. So the conversation around the bubble, I think we started doing work about this question late last year, and we started to hear some people like Jeremy Grantham, smart investors, posing the question. And I think Grantham actually believes that we are in a full blown bubble. Then you see something like GameStop happen, which you mentioned is down 30% today. But to put it in perspective, it still has a $15 billion market cap as a traditional brick and mortar video game retailer whose market cap was around a billion, if I remember correctly, toward the end of last year. So it's a pretty tremendous move that we've seen. When you see things like that, you have to ask the question more seriously, are we in a bubble? And my answer is we don't think we are in a full-blown bubble. One of the three main components in our view of a bubble is this sort of retail mania, and we're seeing it with GameStop right now.
Hmm.
The other components of a bubble are leverage and market valuations. And so, I think if you put it all together, you've certainly got the retail piece. I think there's certainly pockets of the market. GameStop is a perfect example. Some of the things that's going on, I think, in the EV and the SPAC space are also examples of retail bubbles. But when you look at the valuations in the market, sort of relative to history, and you factor in inflation, you factor in what bonds are trading at right now. And I think that valuations don't look as crazy as they might seem at first glance.
So when we talk about the bubble piece of this and GameStop as that kind of starting point, just because it's such a vertical move, we have to ask the question about the bubble. Do a handful of stocks, movements in stocks, do a handful of those companies, have they just kind of essentially injected this fear into the market that we're in a bubble?
I think what they've done is they've captured this sort of public imagination. And a lot of people have had great quotes around the idea of the only thing worse than, seeing your neighbor get rich is, the person who you don't even know who's talking about getting rich on Reddit at this point. And so I think now you've got everybody, every single news media organization is talking about it. Everybody on Twitter is talking about it. It feels like literally every person in America is talking about what's going on with GameStop right now. And so I think you do have this sort of fervor where people are now maybe even more interested than they were in the markets last year and thinking, hey, maybe I can make a quick buck. And that often tends to end up in sort of bubble like behavior. So that to me, I think is the danger.
On the flip side, you have when a lot of people are talking about one thing happening, typically the opposite happens. A lot of people are talking about this being a bubble. Does that give you some confidence that part of your view that we're not in a bubble is that it's headlines everywhere? Are we in a bubble?
It does a little bit. I think, this call of we're not in a full-blown bubble, I think that probably would have been consensus 2 weeks ago, and it might actually be non-consensus now. I think that's probably how quickly some of the rhetoric
What
may
do you
be
think
changing.
consensus is now?
I think it's probably more likely people think it's more likely we're in a bubble just because you're seeing the GameStop thing. I
I
think
agree with that.
sometimes it's sentiment, like this idea, are we not in a bubble? Retail and sentiment plays such a big component of it. And the market still could go down 10,
Hmm.
20% later this year. And I don't know if that would mean they were right, we're in a bubble, they're not right that we're in a bubble. But I think if you kind of objectively look at the other metrics in the market, it doesn't feel like the valuations we're seeing on a relative basis are as crazy as they were in 1929 or as crazy as they were in 2000. I think those are the comps. Those were true bubbles. And right
Hmm.
now, I think we're dealing with pockets of bubbles, but not this kind of full blown, look out below sort of phenomena.
good phrase to remember, pockets of bubble. And I think that if you assume that GameStop is down 80% in the next 2 hours or 3 months or 2 years, I think that that would probably ease some of the tension around the bubble concept. How important is market psychology? You've written about tribalism and some of what's happening with Wall Street bets right now, and kind of the momentum around all this is, at the end of the day, it's the confidence that people have to have about the market. And is that the mechanisms of influencing that confidence, are we seeing it forever change now because of what's happened the past few weeks?
I don't know if forever change. I think it's just a reminder of the madness of crowds. I mean, I think that's one of the great sort of phrases in history is that when crowds do form, they often lose control. They're not rational. Sort of by nature, they don't act on rationality. They act on emotion. That's the sort of aura of a crowd. It's all about the emotion. And we're seeing it now, obviously, on Wall Street. I think last year there were several sort of crowd behavior moments throughout America that had people acting very emotionally about topics they cared a lot about. And what I think is really interesting about GameStop, if you kind of read what some people are saying in this crowd, it's not just about making money. A lot of it is about sticking it to Wall Street.
Hmm.
There is that emotional, we're doing it for the greater good kind of thing, and that's been a real theme, I think, of the last 18, 24 months throughout social media, not just
Hmm.
Reddit, but on Facebook, on Twitter, everything we've seen kind of in the political arena. And so this is kind of the extension to that into the
Hmm.
finance world. I don't know where it ends, but I think eventually, if I had to put money on it, I think these stocks that have had these really wicked runs the last week, I would be shocked if they were still at these levels if we look back on this 6 months from now,
I've been
probably
trying to
sooner.
stay out of the details of the whole GameStop, and I suspect the analogies around Occupy Wall Street are been many
A
of those,
lot of
but
them. Yeah.
it makes a ton of sense. And at the end of the day, just to bring us full circle here, is that you feel that there are pockets of bubbles, but we're not fully in a bubble. At Loop, we really want to invest in massive areas of transformation. And so when we think about creating value for our investors, it's really around going for those massive disruptive areas. I don't think brick and mortar games would constitute one of our investments for massive areas of transformative tech. So we're going to
It
stay
would be
out.
well, it's consensus right now that it probably is, but it would have
Fair,
been
fair enough.
non-consensus a month ago.
I think it's going to be a long shot that Loop
Yeah, I
invests in
think you're right.
GameStop here, but normally we'd sign off now. We're going to do kind of a hidden track here. I don't know what it's called when you like the movie ends, the credit ends, and they do like a
It's
little
like the Marvel extra scene kind of thing.
extra scene. Yeah, we're going to do an
There you
extra
go.
scene. We're going to do a fake sign off here. Thanks for joining Loop TV. Bye for now. The extra scene I want to do with you. Can you explain in layman's terms why GameStop has gone vertical? Pull up the 5 year chart. It is the most entertaining chart I've ever seen. What are the mechanics of what happened?
It's, I think, a very severe short squeeze is the easiest way to describe it.
And for those who aren't familiar with short squeezes,
Short squeeze is on Wall Street, you can borrow stock and sell it instead of buying it. And what that means is, normally when you go and you invest in a stock, you're buying shares, you're acquiring those shares for yourself. If you short a stock, you're assuming the price is going to go down. You actually borrow shares, you sell them, and you have to buy them back to close out your position. Hopefully, you can buy them back at a lower price so the stock goes down. What happened with GameStop is they had what's called a short interest of almost 140%, I think was where it was at the beginning of January. What that means is, let's say GameStop had a million shares outstanding. They have more than that, but just as an example, 140% short interest means 1.4 million shares had been borrowed and gone short.
which
So
means that
actually,
there was a lot of, I guess, professional investors, if you will. I hate to make that distinction here, but
right.
it's important, that believe that it was going to zero.
It was a very popular trade to believe GameStop was going to zero. And so basically, what happened is this subreddit, Wall Street Bets, understood the mechanics of borrowed shares for shorting, and they figured out if we can pump enough demand into GameStop stock and essentially dry up supply for shorts to buy to cover, you can just send this thing vertical. It actually happened in 2000, I think it was 2008, This happened with Volkswagen. Volkswagen, I think for it was like a day, was about a $500 billion market cap because they had this wicked short squeeze that involved some corporate activity with Porsche, and it was a common trade just like this. Everybody in the hedge fund world, they thought it was a no-brainer, easy money. And sometimes when you think something's easy money, it becomes really difficult money in a hurry.
Makes sense. And so essentially these individuals are saying we're going to buy the stock and we're not going to sell it even though it's going up because we want to stick it to the suits.
That's right. And they keep seeing it go up, and that brings in more people to the fold. It sort of becomes
To
a
buy it
self-fulfilling prophecy. Exactly.
and squeeze it.
And just to put it in perspective, what I think this is really crazy. At the beginning of the week, Wall Street Bets had, I think it was about 2 million members of the subreddit. It's got 5 million members last time I looked at it. So that's, I mean, that's probably the most insane growth of a social network in history. I would
From
have to
2 to 5
imagine.
million.
2 to 5 million in like 4 days.
Oh, wow.
150% growth in 4 days off a big number. I mean, 2 million is a big subreddit. So, you capture the imagination of the public, like we talked about before, you get more money going into it, and that just pushes the short squeeze higher. And
Incredible.
now, people have stepped in. I mean, we can get into some of the details. It gets to be fun, but Robinhood, TD Ameritrade, I think, actually removed the ability to buy GameStop stock on their platforms. You could sell if you held, but you couldn't buy. And there's been a fervor right now
Why would they
in
do that? I
politics.
mean, what to protect the professional investor or
I don't know what they would say it is. I think there's conspiracy theories about them sort of protecting, like you said, maybe Wall Street. I don't know if they had pressure from regulators. Who knows? I
Mhm.
think eventually they'll explain their rationale. You could even say we're trying to protect the individual investor because whoever gets in at the end of this trade is going to lose a lot of money,
Right.
and it
I think
will
that's the
ultimately
answer.
be individuals. Yeah, I mean,
Yes.
individuals, a lot of
That's
people
what
are
they're
going to make
doing.
some money on this. You're going to hear all about
Right.
them. You're not going to hear about all the people who bought GameStop at the top and lost half their money.
Right.
And there's going to be a
That's
lot of
why
them.
they're doing it's about taking care of the everyday investor, which makes a ton of sense. You just made it
Yeah.
as easy as ABC there, and thanks for the extra mileage there. And this is our real sign off this time. On behalf of Doug, Gene, and Loup TV, bye for now.